What went wrong? What was the biggest thing that went wrong with SunEdison?
Well, I mean, in hindsight, it looks obvious what went wrong. But I think essentially what went wrong with SunEdison is there was something called a yieldco. It was something that was created by investors. And what it did is it allowed SunEdison to acquire projects and effectively drop these projects down into this investment vehicle at a very low cost because investors would invest in the yieldco. The dividend yield was 4%. SunEdison's cost of capital was 9%. So it was a much lower cost of capital. So SunEdison went out and aggressively brought everything they could. They just took on tons of debt, and they did this via leverage, brought a lot of stuff. And even we at one time were positive on this dynamic because we thought that investor appetite for yieldco would never end. And it did abruptly. And when that happened, people still clung on to the story. And I think because so many smart investors were invested in the stock, management believed their story as well, and they kept being aggressive with cash spend, and then it all came tumbling down.
And a real turning point was Vivint Solar, right?
That is correct.
What happened there? It was a company that was different from those that had acquired previously.
Right. So SunEdison had a portfolio of projects that were utility-scale projects. The way to think about it is they had a government backing. They were backed by governments across the globe. Governments have high credit ratings. And then they went out and acquired Vivint Solar, which is backed essentially by individuals like you and me. They have FICO scores, but essentially it was a bunch of rooftop solar projects that were backed by individuals. So you mix a portfolio of projects backed by individuals with a portfolio of projects backed by governments, and the risk increases. So that basically ate into the whole yieldco story and suggested the backlog of utility projects they said they had wasn't real.
So is SunEdison a story unto itself? Is it a unique situation, or are there other solar companies that are in a similar situation? We've seen the shares of Edison, Solar City, Sunrun suffer quite a bit this year.
That's a great question. So it's funny you say that. You look at SunEdison, it was a company that when they entered this yieldco dynamic, they started burning a lot of free cash. Their free cash flow went negative. Their net debt went up significantly. Other companies that look just like this right out in plain view, Solar City, Sunrun, Vivint Solar. And you could argue that these are companies that are rooftop solar companies that are doing the exact thing that basically SunEdison went out and brought one of these companies, essentially brought it down, brought the stock down, and eventually led to the bankruptcy. So I think there are companies out there in plain sight that are doing similar things. And the other dynamic is the way people value these companies. People value these companies using retained value analyses that essentially use 20-year DCFs where you're making estimates 20 years out, and it's extremely hard to do. So I think when these things come crashing down, it happens pretty fast.
Just real quick, which of those companies, or which company, solar company, do you think is sort of the worst offender or the next to potentially?
Well, the one we cover is Solar City. We have a sell rating on it. I think there's a lot of risk in that stock. And the stock's been on a tear recently. And these stocks are really sentiment stocks because they lose money every quarter and their free cash flow is extremely negative. So it's just a sentiment play. And there's been some positive data points that have came out. Not data points, but things that governments have done. And Solar City raised some cash and the stocks went up a lot. We think they're going to miss earnings. We think they're going to have to miss earnings. They're going to have to bring down full-year guidance. And we don't think they're going to be free cash flow positive as they said they will. So we think there's big risk in that stock.
Two last questions pegged to this filing. Anything you learned from it today that's particularly notable? And then looking ahead here, this is a company that says it's going to be able to spin off some debt, spin off some non-core assets.
Yep.
How difficult is that going to be for them right now?
That's a great question. So what's going on right now is you have first lien and second lien debt holders fighting. SunEdison's first lien and second lien debt holders fighting with about who's going to provide the debtor and processor funding. So what that means is who's going to give them the money they need out of bankruptcy. If the first lien guys win, they're going to sell everything immediately. All of SunEdison's projects, they're going to fire sell them. It's going to hurt the solar market because everybody who has projects, if you fire sell all of SunEdison's, your projects are not going to be able to be sold for a high value. If the second lien wins, second lien debt holders, they're going to actually try to get more value out of the projects. So that'll be actually slightly better. Still negative, but slightly better. So that's what's going on right now. Will they be able to sell the projects? Absolutely. I would buy their projects for $1. I'm kidding. But the point is there's a price for every asset. So they will be able to sell the projects. The question is, what will the return on those projects be? And I think that's really the question that nobody knows right now.